Hey everyone. We'll just wait while people jump into the room. Oh, there's Matthew. Hey Matthew. Great to see you. Oh,
Hey
we have
guys.
Michael Matthews here, who's a US Canadian accountant. Sam, one of our RP members, is here. Hey Sam, how's it going? Let's just see. Everyone, tell us where you're from in the chat as you guys jump in the room. Today is a day to meet all of our US experts, and I know we'll have a lot of Americans in here, so we want to make sure we know where you're from, but we are a global company, so we will have people from all over Canada, as well as different parts of the world, who will be looking to invest in the US as well. So let us know where you guys are from, so we know best how to serve you. Oh, we have Hugh. Hey Hugh, it's from Barrie. More people will kind of be jumping in. Just wait maybe a couple seconds. Someone from Richmond Hill, from Toronto. Amazing. So I know we have a whole bunch of Americans here too. We have San Francisco. And excellent. So while we're waiting for some more people to jump in the room, I'll just give a quick introduction to what we will be doing over the next 60 minutes. My name is Monica Jazik. I am the founder of Real Property Investments. We're the world's fastest growing real estate investment community. And today we are sharing our US experts with yourself. Now, our main managing director and facilitator for all of our US clubs, I think we have 6 US Real Property Investment US chapters, and aim to help American people build wealth through real estate and alternative investments and give them the resources they need to start investing different. And to introduce our amazing roster of experts, I first want to introduce Lucy Moy, who is our US facilitator. She manages all the US clubs. She's made so many of these connections. I'm so grateful to be working with Lucy. Say hi, Lucy.
Hello, everyone.
And I'm going to try to share this on Facebook, do a little bit of a live stream. We're going to get a bit of information about who these amazing people are in our network. You guys, they're going to write down their information in the Rolodex in the chat. Make sure to add this to your Rolodex. This is gold. I'm going to try to get it live stream while Lucy is going to introduce everyone in the room. So take it away, Lucy.
Hello, everyone, and welcome. My name is Lucy Moy. I am the U.S. facilitator for Real Property Investments. Thank you so much, Monica. Again, very excited. We have some amazing guests on our panel this afternoon. First, I'd like to start off with Dennis Blitz. Dennis Blitz is the principal and founder of IRA Club. He's a wonderful self-directing investment custodian company located in the Chicago area, so we're very excited. He's also written a number of books, especially if anyone here has written your Series 6 and 7, your securities exams. Dennis Blitz has written many of those textbooks. We also have here Richard Mariansky. He's actually a business and investment consultant, investing probably over the last 6 decades. I believe it's 6 decades, Rick. Investing from everything from self-storage to land development, a multifamily, single-family home, new developments. I mean, you name it, he's done it. So, Rick, we're very grateful to have you. Next, we have George Gromberger. I hope I pronounced that correctly, of Money Alignment Academy. He is actually very he's been wonderful working with a lot of larger institutions, as well as working with individuals to help them with their wellness when it comes to their finances. And he runs Money Alignment Academy, where he helps to empower individuals to take control of their finances. So thank you for joining on. I'd also like to introduce Jackie Swaggerty. She is the founder of Women Real Estate Investors. Thank you, coming in from the Houston area down in Texas. She also runs with her husband a very successful contracting company, is also a real estate agent and broker called Better Option Houses. Did I say that correctly, Jackie? Hopefully. So
yeah, Better Options House Buyers. We flip houses and buy houses.
Perfect. Yes, we're very excited to have her on. We also have Kathy Calderini of People Care Funding Solutions. She does a lot of hard money and commercial lending across 40 different states. So we're very excited to have her on. And hopefully I did not miss anyone here. Monica, I think we have everyone here. Oh, and we also have Matthew Ma, which I believe is from Avent University. He works out in the San Francisco area, helping investors to get started on their investing journey. So we're very, very excited. It's going to be a real powerhouse and a think tank. So anyone here who has a question, feel free to ask away any burning real estate investment questions that you may have. This is an incredible opportunity, and this is truly a mastermind. And we're so excited that everyone's here. So thank you.
Well, we missed one
I'm sorry.
because she just came in. It's not your
Oh.
fault. So it is actually Rochelle Laflemme. She just popped in as well. If you want to give a quick shout out to her, and then we're going to give the stage to some of the experts to give them a chance to kind of introduce themselves or say hello. So
Great.
So now you have to introduce Rochelle, Lucy.
Rochelle, yes, Ms. Rochelle Laflamme. She is currently in Saskatoon, Saskatchewan from Canada, but she's now coming down into the US. Are you right now in Ohio, Rochelle? Yes, and she's a wonderful entrepreneur, going out and working mainly with clients looking for passive income opportunities in the Ohio area and a few other areas. So if people are looking for more cash flowing opportunities, Rochelle, she's definitely someone that you should be speaking with. So I'll let you guys take it away, Monica.
Excellent. All right, Al, are we live streaming here? I'm not sure if it shows.
Yeah, I can't tell.
All right. Well,
let's assume you are.
Okay, so let's pretend we're live streaming because you got to love this technology. Thanks so much, Lucy, for that introduction. I just want to kind of go around quickly because I know we're probably some people are in a view only mode. So if people kind of want to take a quick minute to sort of introduce themselves and sort of what it is they do and how they want to help people. And in the meantime, if anyone has any questions that they're looking from our experts, make sure to write them in the chat because they're here to help you and they will answer your questions live, which is really exciting. So I'd like to start with George, actually, because George is someone I met. I was actually a guest on his Lifeblood podcast, and I absolutely love how George is a fiduciary, which is huge because he is here to help American people and give them financial advice to really help them do things and invest different. And that's what we're really passionate about at RPI. And George is, financially free from following his own financial advice. And he provides a lot of programs and deals with institutions telling things about the different ways to invest and how we can help American people really build wealth differently. So George, can you quickly brief on kind of some of these programs available and where people can learn more about them?
Yeah, no, I appreciate it. And thank you all for having me. It's been fun getting to know you, Monica, and everybody else on the call. So, we live in a very, very, very busy and hectic time where we have all the world's information on our phone, and we've got algorithms tracking us everywhere and just so many different demands on our time. So I get excited about helping people to just do our best to get down to what is most important to them and then take a really integrated approach to actually helping them get there financially. So I imagine for the majority of people on this call, they're interested in real estate investing, and it's my desire to help you figure out how that's going to fit into your overall financial picture and situation. And Monica mentioned that as a fiduciary, that just means that I'm legally obligated to act in clients' best interest, which you're probably familiar with, but that's also a term that's been thrown around quite a bit as of late. So I want everybody to just think of me as a resource. If you have any question about anything, really, if I can't answer it, then I'll say I can't answer it. But that's kind of how I look at myself, as just a resource person who can help you get to wherever it is that you're trying to. So you can find me at moneyalignmentacademy.com, or I'm very active on LinkedIn as well.
Yeah, I love that, Money Academy. Make sure you write that in the chat where people can find information about that, because I love the fact that, I was on this Tony Robbins, everyone knows I'm a huge Tony Robbins fan. And the only thing about Tony Robbins is this whole financial advice kind of thing. It's just kind of like, it always goes back to people talking over people's heads and giving advice. And they keep telling everyone, go to a fiduciary, go to a fiduciary. And the problem with fiduciaries is, with most fiduciaries, is they have to have kind of a minimum book for people to help you. Now, George, like I said, has been very successful in his career as a financial planner. And it's not like most fiduciaries are evil or selfish or greedy or whatever, but it's just the fact that when you get into investments and stuff, time is money, and taking a lot of time, it is natural that people have a specific book, and that's who they can serve and accommodate because they have bills to pay and stuff as well. Now, George was very, very successful with his career as a financial planner, and like I said, did a lot of this investing advice for his own planning. So he's actually one of those really rare fiduciaries who could take on people. Not only does he take on people, who a lot of fiduciaries would not take on because maybe they are starting out or they don't have enough in their book, but he's still able to either help them if they hire him to build that wealth, or at least take advantage of some of his programs. And George, I just can't express how game-changing that is, because some people come to us and they want to invest in real estate, and before we can send them to, say, to Dennis or to Rick or to Jackie or to Rochelle, they have some real homework to do on their end. They got to get themselves ready to be able to qualify for mortgages. They have to learn how to pay off some debt so they look better on paper. They need to start learning how to save for a down payment for a house in regards to what investment opportunity. Even if they're using private lenders like Kathy and Deb, they're going to tell you there's still a certain amount of money that you need to kind of put down. So I think, I'm so excited to work with you, George, because you are such an excellent starting off point. Because at Real Property Investments as wealth builders, it's not just about buying and selling real estate, you guys. It's about building wealth. And sometimes you might not have the money, you might not have the buying power, and you might not have these habits. And you know what, guys? That's okay. And if you're able to identify that, rather than griping and saying, oh, I have no money, so I'm just not going to do it, you might really want to look in the mirror and ask yourself, why do I have no money? And what could I do differently? And we have these experts and these resources that are here that can actually give you these tips that will help you move forward. So if you're on this call and you're one of those people that are just starting out and you might have no money, no buying power, no tips, sorry, I cannot tell you smokes and mirrors strategies and get rich quick tips. We're not about that at Real Property, but we can point you to experts that can help you to figure out what the problem is right now and how you can be active in solving those problems. So make sure to write that down in the chat, George. Thank you so much for that. I'm going to actually ask Jackie to come live next. So Jackie, like Lucy was saying, is an amazing investor in Texas, investor, real estate agent, she's lending, just everything, a Jill of many trades for sure. And also running the Women's Real Estate Investors Facebook page, which is now at 19,000 people. I can't believe it. How are things going in Texas? I know things were pretty rough the last couple of weeks. Are things kind of the mend?
Well, right now it's beautiful. It's sunny. It's probably 80 degrees outside. But yeah, we had about 2 weeks ago, we had that crazy freak freeze. And one of my rentals got flooded, busted pipes. But the saddest thing is just loss of life because people here aren't prepared for it. Houston homes are designed to keep them cool, and I understand, and I've lived in northern states, I've lived in Wisconsin, and when you're in a property that's designed to keep it warm, the pipes are built under the house, not in the attic and stuff like that. People take more care to put in double pane windows and not single pane windows. And here in Houston, we're just not designed for weather like that. So it's an absolute shock to the system. Excuse my cat, I'm sorry. Anyways, I'm Jackie Swaggerty. I've been real estate investing for a little over 10 years. I'm a licensed agent, but I'm really more active on the investing side. I hold my license for all the data. I think that's pretty valuable. But I'm licensed in Texas and New Mexico. I have got some rentals, some Airbnbs. I did my first note last year. And my husband, we also have a construction company. I really run the acquisition side and dispositions, and he does all the rehabs, which rehabs is actually not really what I enjoy doing. I like the buying and selling side. And let's see what else. I took a break from flipping houses in November to get into multifamily. And in the meantime, my partners and I are doing some private money lending. And my kids are 4 and 2. And about 2 years ago, I was stuck at home and bored out of my mind with a little tiny baby. So I created Women Real Estate Investors, and it's grown up to almost 20,000 girls. And it's been an amazing resource. One really interesting thing about real estate investing is I feel like if you're doing it right, you're forever going to be an amateur somewhere, because the room for growth is exponential. And so while I feel very well versed in single family, I'm an amateur all over again in multifamily.
Yeah, you always have to be learning, because we always are growing and changing. And, you know, if you're doing the same thing, the last thing this world needs is another stagnant real estate coach or, you know, a real estate club. And you know what that's like. The presenter comes to the room and talks about a strategy that was like from 3 years ago. It's like, thanks a lot, people. It's not going to really work today, or not going to work in our area. So that's why everyone has a different area of specialty across our board of experts, so everyone can kind of participate. Now, can you give us a quick rundown of Texas, and like in regards to why is it such a fantastic place to invest, and what are people looking in terms of purchase price, and how much money can people expect to make off, you know, a pretty easy flipping a home?
Yeah, well, no self-employment income tax. And that's kind of nice. Home prices are comparatively low compared to especially the coasts in the US. And a lot of economy, huge economy here. Texas is basically a country within a country. We have a little bit of everything. We have major medical, we have space, we have oil and gas. We've got coasts, we've got country. So it's a fantastic place to invest. I will say the property taxes are a little bit higher here than in some other areas, so be sure to account for that. But you know, the majority of my properties are all in the 150 to 250 range that are my hold properties. And I think that's, from what I understand, more difficult to do if you're on the coasts of the US. So I love Texas. I'm from New Mexico and moved here to Houston about 5 years ago. And New Mexico's real estate is surprisingly expensive, considering it's the 49th poorest state in the nation. So I think we're going to be seeing a huge influx of money here in the next 5 to 10 years for sure.
Yeah, I love Texas as well. We have a Real Property Investments chapter in Texas. We're looking to do more presentations with you just for the Texas chapters. And we also had Abel Pacheco, who was on last night, talking about his apartment syndication opportunities in Texas. And he's supposed to be on this. I'm wondering if, you know what I think happened, Lucy, was maybe a bit of a time difference or a misunderstanding, or he could be right there in my inbox saying, can't find the link. Happens a lot. But yeah, we're so excited to be in that area, and that's a really achievable price point for investors. And like you say, speaking of prices along, you know, the coast, and Matthew, I was wondering if you wanted to jump in here.
Sure.
And you're from the Bay Area. I mean, what are we looking at from real estate prices around there, and what kind of opportunities are available that you provide for investors?
So yeah, hey guys, I am a San Francisco-based real estate investor, single-family homes, specifically going in multi-units. Started buying real estate when I was 24 in San Francisco. I have a team of about 35 agents now in throughout the Bay Area in a couple of different states. I am a new investor syndicator, and we're raising our fund right now. But for the real estate in the Bay Area, the single-family homes are flying off the shelf. There's approximately 16 offers per property now. and they're going, and there's like 80 showings in 1 week. Even with COVID, they're by appointment only, but there's like back-to-back showings throughout the whole day. Multiple offers, multiple cash offers, and going hundreds of thousands of over asking when they're clean, remodeled, and vacant. If they're tenant occupied, it's a lot harder because you do have, San Francisco rent control, Berkeley, Oakland, and some other areas. But there is a lot of good equity to be made on those properties if you're doing sweat equity. In terms of buying homes, there's really limited inventory, and people they're flocking out of downtown condos. They want to go single family homes throughout the Bay Area, and house prices are actually rising because the interest rate is still super low. And people wonder when it's going to stop. It's just been going up every year, and because of limited quantity. So one we did put on the market had like 300 over asking. So it's nice to see for sellers, but at the same time, when I'm doing
$100,000 over asking.
Yeah, exactly. So on the average price point, I would say 1.2 to 1.5, but on average, you're going near 1.5s now. And some extraordinary cases where, like San Francisco Sunset District, it's smaller houses in about 800 to 1,200 square foot. One of them we bid it on, but we lost, of course. It was like 1,100 square foot, and it sold for 1.8 million.
Wow.
On average, before it was worth 900,000. So the sellers hit the lottery there.
It's like a global lottery that's
It
happening.
is for the sellers right now. But there's still opportunity for buyers to be had. We still get some good deals in good locations. You just got to be really specific in what you need and want and what's fair price to this market.
So I'm assuming that a lot of your clients are end users, obviously. And with your investor clients, is it just pretty much impossible for them to, get the cash flow and appreciation from the buy, rent, hold? And as an investor yourself, is that why you switched into this apartment syndication model?
So a couple of different things. For the San Francisco Bay Area, I love multi-units. I do love it here. A couple of things to note though, on average, you're probably hitting 3.5% to 5%, which is not that much in the percents per the cost. So average costs for multi-units start at 2 million, 3 million, 4 million and up. But what you're looking for is long-term growth and equity. You're dealing with rent control. You're dealing with different kinds of tenant profiles and the ability to raise rent and add value back to the property. If you can do that with the right strategies and team, there's a lot of great equity to be made, and you can make millions of dollars doing it, but you have to be able to handle the challenge. On top of that, what we did was we have some clients who are not at that level to buy at that buying power. So we help them invest out of state using our real estate fund to do syndicate throughout the US into multiple states. So we actually have a fund rather than a specific specified property.
Yes, and that is an amazing way that people can get into real estate. It doesn't have to be all active real estate. I'm a huge investor in passive real estate. I absolutely love it because it allows me to take my money and diversify it amongst a whole bunch of opportunities and not be there dealing with tenants and toilets and even the brains, and planning and management. I mean, real estate is tough. If anyone's told you that real estate is a passive investment, they're wrong. Michael Matthews would be the first to tell you here that, yeah, it could be maybe the only way it's passive is on paper, but active, it is active. Now, Dennis, can you tell us quickly, because you have the IRA Club, you have something called Investors Row. Can you tell us a bit about Investors Row and some sort of these passive kind of opportunities that investors who are lazy like me can participate in?
Well, we have the lazy button that you hit. No, there is no lazy button. But Investors Row and what Matthew was just talking about is really what we deal with a lot. We get a lot of investors, obviously, who want to be passive investors because that's what an IRA is for. And we do IRAs and solo 401ks, and they're for passive investing. And so something like what Matthew was talking about is perfect for us. If the person has an idea, great, call us up and we'll let you know if it's a qualified or unqualified investment. And some people are just looking for an idea. So if they go to our website, which is iraclub.org, and there's something on there called Investors Row. Investors Row is just companies that we have worked with in the past, and they offer passive investing. We don't recommend investments. We can't do that. We don't offer or sell investments, so we don't recommend them. But what we do is we make them available Their phone numbers are there. A little description about the company is there. And you can call them and do your own due diligence. And there's everything there from passive lending, like Jackie was talking about, which is very, very, common and very, very popular. Passive real estate is there, like Matthew was talking about, to onto everything, including cannabis companies and Lord knows what. A lot of clean
So
energy.
we're getting a bit away from real estate here. So it's not just real estate at the IRA.
Exactly, because an IRA or 401k can make a passive investment, and a passive investment can, by far the most common investment is real estate, and then hard money lending. But after that, we've lost count of what people have invested in. It's astonishing. Clean energy is common, etc.
Yeah,
So-
we do a lot of here in Canada too. Like I've invested in a lot of passive companies that have, they're the back office for similar to Investors Row, and it allows us to diversify too. And I'd say 90% of the investments that they have on their shelf are real estate, but there's always a few of those companies that are not, and that's fine. I mean, you could talk to George, and I'm sure he'll tell you ways to invest in other, even mutual fund projects, in stocks, in all sorts of different types of investment opportunities. And at Real Property Investments, with the stock market, everyone knows how I feel about stocks and mutual funds, because when we started out building our wealth, Vaughn and I, we just did what our traditional financial planner told us to do. And we had the set it and forget it model. So basically they advise on mutual funds. You meet with this guy once, they come to your kitchen table to establish trust. I don't know. And you make a plan, and you're asked 3 questions. What's your risk tolerance? Low, medium, high.
Mhm.
After I answered those questions, I never heard from again. And I just get statements quarterly, and I had no idea what was going on. So with the mutual funds and stocks, I know a lot of people out there, you should be investing in mutual funds. You should be investing in stocks. You should have a diversified portfolio, but don't do what I did. Don't do what 99% of Americans, Canadians, and Australians are doing, which I call the set it and forget it model, which is basic financial planning that you don't understand. That's not from a wealthy advisor. I don't think his car was very impressive, and nor was his suit when he drove up across my kitchen table. So I really trust, now I look back at his advice, and I just try to tell everyone, you have to have control over your investments. So we're not saying real estate is the only way, even though I will say real estate, I think, is the #1 wealth builder.
Mhm.
If you do want to have more liquid options, more short-term, stocks, mutual funds could be fantastic, but use an advisor who has achieved what you want to achieve, and make sure they have active conversations with you. You're reviewing quarterly, and these kind of investments, just like real estate, are all part of your wealth plan. So thank you for saying that, Dennis. That is a really, really great point. And I'm actually happy that Investors Row has some non-real estate investments available as well.
Well, not everybody, has either the time or temperament to be an active real estate investor. It takes a temperament that is not the common temperament to be an active real estate investor. And, there are a lot of good passive companies you can work with. Sure, you're giving up some profits to the organizer. Sometimes that could be the right thing for you.
It can be. Don't ever be scared. If people are getting paid, that's good, because then they're working harder for you. Why
Yeah.
do you think hedge fund managers are so successful?
Well, because you can look at their background, you can look at their history.
Exactly. And like, I think Rochelle is one of these people that will tell you how busy it is to be a real estate investor, an active investor, because she has all going on $1 billion of real estate that they're tying up. They're on their journey to $1 billion. I think you're at 90 million so far. Is that right? Or 100? Is it 100 million yet?
130 million at the last.
130 million. See what a difference a week makes.
So thank you. Yeah. So for us, we buy about a house a day in Canada right now, but I'm in Cleveland right now, and we are now set up for Americans. So we just are tying up our first few properties here, and then we're going to be opening up in other markets, but we have a very, very specific model. So we only look for cash flowing properties, and we look for specifically the 1% rule. So if anybody's not familiar with that,
That's buying a property for 150,000, renting it out for 1%, which is $1,500. So Matthew, wow, those numbers are staggering. That is just like completely blew my mind. And I'm like running the numbers and I'm like, okay, so if one of my clients worked with us and they got their 15% return passively, they'd be getting thousands upon thousands of dollars, but we'd be spread out over, 10, 20 houses. So it's very different model. So it's always just really figuring out what makes sense for the actual individual. But for us, that's our model. We actually have two different investment opportunities. The one is actually where we can work with people's IRAs and 401ks and their Roths, where it's more the private lending side. So that is where our investors actually fund our flip. So it's called our Fund to Flip program, where essentially the investors pay for the purchase and the renovation of the project. They get tied to the actual physical asset as security. So basically they're private lending their funds to us. We pay a 10% annualized rate of return. On average, it's a 6-month deal. The investors make the full 10% at the end of the year, and it might have funded a couple different projects, but for us, that's just the way it works. It's easy, it's passive, and it is secured by the asset that you're tied to. And then what we do is we find these distressed properties and then we lightly renovate them into cash flowing assets that we then turn around and sell to our hassle-free landlord owners. So we've kind of created our own ecosystem. We're not just flipping houses and putting them on the open market. We're flipping them so that we can have cash flowing inventory that we then acquire with our hassle-free landlord owners. And in the hassle-free landlord program, our investors are responsible for putting the 20% down payment and paying for the closing costs and getting the mortgage. It's physically your property. But what happens is we actually become your guaranteed tenant. So we sign a 2-year lease with you. So you know exactly how much you're going to cash flow every single month. So it's not a turnkey rental opportunity, which is what a lot of people in the States are doing right now. This is literally, we become your guaranteed tenant. We take all the risk and then we sublet the property to our physical tenant. So in the hassle-free landlord program, our investors actually earn 15%, on their 20% down payment and closing costs. So that 15% cash flow, just for quick numbers, if you were buying a $150,000 property with us, you're basically going to be cash flowing over $400 a month, completely passively. And that's basically on a $33,000 cash investment. So again, the numbers are there. Is it a best fit for everybody? No, some people want the whole enchilada. They're like, I want all the appreciation. I want all the cash flow. For us, we're looking for cash flow rich markets, not appreciation heavy. And so again, sometimes you got to pick your values, right? If you're looking for the appreciation play, that's not with us. We're looking for steady cash flow.
I love how you said that because it's true. I mean, sometimes you can have a little bit of the best of both worlds, but usually in investing, because we only invest in high growth areas, and I'm sure Rick's going to touch on this. And I'm curious to hear about the areas that we have experts in as well, because investing in these in areas without a strategic model like Rochelle has, we call that, paper transactions. They look good on paper. Oh, I'm chasing 10 caps, I'm doing whatever. But a lot of the times your tenants aren't going to pay rent. You're not going to get that growth, that appreciation that you really need to make real wealth in real estate. So I think that's so important that you do have to make a choice. And when we are welcoming people to the real estate investment community at Real Property Investments, and I do intake people on their wealth blueprints, we pretty much have this methodology where we figure out why the heck are you doing this in the first place? Because it's really scary to invest in real estate. You're stepping out of your comfort zone and there must be something. What's hurting you guys that's making you do this? And that's the real problem that we have to solve. Do you have a kid that is going off to school in 5 years and you don't want them to start with student debt? Or are you, 50 years old and your retirement is zilch and you got to get some pennies in that retirement fund? Or have you been laid off by COVID and, now you have no income coming in and this is a real issue? You realized how your job, it's not about leaving your job. It's about sometimes your job leaving you. These are real fears that adults deal with. And so when you're picking a strategy, if you want to do something, you're super duper busy because you have a high profile job, but you're not getting the returns you want, passive investing, would be a great option, whether it's with Rochelle, whether it's with the IRA club, that's fantastic to grow your money there. But if you have a problem, you're looking for income replacement and you need to do something more active, well, that's when you want to call someone like, say, Matthew or Jackie. you know, I have this amount of money available and I have to kind of create this. And also Lucy, we can't forget you. And I know you didn't really give yourself too big of a plug too, who's an amazing real estate agent and has a supersonic model in Atlanta, which has a lot of growth in the Atlanta market. So we kind of talk about different price points here. I mean, Jackie, you're in like the 200s, and Rochelle, you're kind of a little lower as well. Matthew, you killed us with 1.8 million, but there's larger scale opportunities. Lucy, can you kind of tell us quickly what's going on in Atlanta in terms of price points and investment opportunities there?
Sure, absolutely. So a lot of my focus, I mainly focus on new construction opportunities just because I'm looking at it from a total investment standpoint, right? Where we're not getting caught up in the bidding wars that's happening pretty much all day, every day on the resale end. So we're looking at price points in about $300,000 to $400,000, which Rick will probably tell you, that's our sweet spot, right? Where you're going to have very little maintenance issues. You're going to get the highest yields from your property. So kind of we're playing in that range from 300 to 400. You might still get a little bit of cash flow, but really this is a really strong growth play.
Yeah. And it's an excellent model as well in terms of you get a little bit of cash flow, you get that appreciation. And I really, really think that all of you need to get Lucy's contact. She's been so great writing everyone else's information. Lucy, make sure you have your own there, because I think there's only about 6 months left in the Atlanta market to take advantage of the sweet spot, as she put it, right now in terms of price. Because when the prices, I mean, everything, like we're having a global real estate craze, prices are totally on the rise here. And when they get to a certain point, you have a choice. You change your area or you change your model. Now, normally we change our model. And so Lucy and I are focusing on tying up new construction homes. The deposit structures are very low. The build times are very short. And the equity is there from what you get the value for to what the creation of that home is and what it compares to existing homes in the area. You are getting a maintenance-free investment that has built-in $20,000 to $40,000, because we know in real estate investing, you don't make money when you sell, you make money when you buy. So like we're talking about choices, you're not going to get that juicy cash flow like Rochelle was talking about, but you will take advantage of an easy, not passive, unless they JV with you, Lucy, which she has JV opportunities, but an easier, lower maintenance investment where you really can pull some of that money out. And Canadians can participate in all these opportunities as well. And I know Kathy from People Care Funding Solutions here. Can you talk to us, because I know one of the number one problems why people can't invest in real estate is they say they have lack of money or they don't have the buying power or qualifying. Can you quickly talk about how you can help people address those issues?
Sure. Thank you very much, Lucy. Excuse me, and Monica for the introduction. We're hard money commercial brokers. We lend in 40 states. Right now, the competition, as everybody's talking about, is, you know, hot and heavy. So the key we try to get our customers to look into is to get laser focused and get pre-qualified for their hard money loan, which does not require any income. We don't care what you do for a living. We don't care what your income is. It's asset-based, credit score-based, and your experience level. We work with people who are first-time flippers all the way through to people like Lucy, who have multiple projects under their belt and very successful at it. We deal with 10 different lenders because we are brokers, and those lenders all have different underwriting criteria. So what we do is try to find out what your goals are and then meet those goals based upon that. And some of them require debt service coverage ratios of 1.25. Some require 1.1%. Some require long-term leases, which makes it tough for the short-term rentals. We have a couple of lenders that apply off of market rent. There's a lot of different opportunities, no matter we fit into the lender that you.
We're losing you a little bit there, Kathy. You're a little bit garbled at the end. Can you repeat that last sentence?
So again, we try to find out what your goals are and what your strategy is that you're jumping into, and then go ahead and find an opportunity that for a lender that will meet your goals and help you accomplish them. So we work a little bit backwards. It's not a plug and play per se, like a lot of lenders do.
So who are your main clients? Like which American clients would really come to you to use People Care Funding solutions?
Real estate investors, people, like I said, who are getting into the business for their first time. We have a group on Facebook called First Time Flippers, where it's totally focused on education. So we kind of hold their hand from the very beginning till they are able to purchase their first project, all the way up until, you know, people like Lucy. Lucy and I have worked together on a couple of her projects. So anybody that is interested in real estate investing, we can help.
Right, excellent. And how can you help international investors?
International investors, we do foreign nationals. There's a couple extra requirements as far as underwriting goes. You need to have a ITIN number, you need to have a U.S. entity, and you need to have a U.S. bank account. But other than that, the leverage is just reduced, usually around 5% for a foreign national on the different lending programs. So more than happy to talk through whatever situation you have and see how we can help.
Perfect. That's amazing. Excellent. And Michael is also our accountant here. He's actually in Canada, but he's a US Canadian tax accountant. So Michael, like how could you help Canadian investors get into investing in the US and take part in some of these active projects?
Hello. What I do is I work with Canadian investors who want to work in the States by helping them set up their structures that they're going to need. I have US CPA colleagues that help with that process. They can set up anything that's required in fairly short order, and we coordinate on the strategy so that we make sure that what we come up with will work on both sides of the border.
Excellent. And this is for both passive and active investment opportunities?
Yes, it is.
Excellent. Perfect. So if someone could write, Lucy, if you could write Michael's contact, or Michael, actually write your contact if you haven't already in the chat, because for our Canadians, this is someone you definitely have to know for sure. So, and also if anyone has any questions, our speakers will answer your questions live. So make sure to write them in the chat, or you can put up your hand and we will ask them. Before we get to questions, I do want to ask Rick, because I'm just dying to know here, because Rick, I just love your opinions. And you're speaking on an event this Saturday. Everyone should definitely come out and see our event on this Saturday. It's Deal or No Deal. And it's an amazing presentation of how do you even analyze a good real estate deal. So Rick has been in the business for over 60 years. And he always has an opinion about everything. And when smart people have opinions, I want to hear them, because if you're the smartest person in the room, you're in the wrong room, everyone. So I can only imagine the level of intelligence in this room. So Rick, we talked about Texas, we talked about Atlanta, we talked about the Bay Area. We have Abel, you did show up. I knew you got the time wrong, didn't you?
Yes.
I knew
like,
it.
I thought I was early, and I am not early.
See, and I said, I bet he got the time wrong. See, I feel you. This is a connection with our experts. It's real at Real Property Investments. I love it. So Rick, what are your thoughts on these markets, and what is the growth in these markets, and what do you think about the areas we discussed so far?
Okay, well, all right. So like she said, I've been doing it for 60 years, and right now I do consulting, and I have clients in all those markets: California, Florida, Arizona, Houston, Texas. Every market is different and has a different set of numbers. So if you're in San Francisco, you can make money, but it's going to be different than if you're looking at a cash flow market. So some markets produce income, some markets produce growth, some markets don't produce anything. You know, the best thing you're going to get out of it is a tax benefit. So the idea is to be able to analyze every property that you're working with and where it is to see what it is providing for you. And that's what I specialize, is analyzing each property So it's not the market. I'm from Los Angeles and now I live in Miami. People say, well, what's going on in LA? Well, LA has like 200 different cities in it. You have to look at what city are you in, what neighborhood are you in, what zip code, and then what property you're buying. So you have to drill down to each particular property. Then you have to understand the market and what the projections are for that market in terms of growth, in terms of income, in terms of diversification of business and so forth. But one of the reasons that Lucy's in Atlanta, I've been working with Lucy for several years. She decided to move to Atlanta because that market has a lot of the fundamentals that investors look for. It has a great diversified economic base. That means a lot of different industries that produce income. It has population growth. It has businesses. It still has the opportunity where you can have income. And like you're saying, Monica, it's starting to go up more and more in value. So that, but the thing is, it's such a large market. So there's still a lot of areas where you're still getting income and you have the growth. A lot of people are going from California to Atlanta because it has that opportunity to get that income and the growth.
Absolutely. I love that. I love that you say that because you're right. Like people can make money in any market. And it's not just like this place is good and this place is bad. It's your job as the investor, you know, really to figure out sort of what model will work in that model, in that market. And Rick, what I love about you, and Rick is one of our, like a higher end coach for sure, is that you are old school in the sense that you love to do personal coaching. You love talking to people, and that's the way you coach. You don't have canned presentations and courses and this stuff.
I try and come up with a business plan for the individual. And like Dennis was saying, and you were saying, sometimes it's not real estate. Sometimes the smartest thing is to focus on the business that you're building. If you're making a 30% yield on your business, why would you go do something that's making a 10% yield? You know, a lot of people say, well, you need to diversify. Well, when I was a stockbroker international, you know, the word was, when you're sure, keep it pure. When in doubt, spread it out. So if you're making 30%, I'm going to continue to make 30% till that starts to go down. Then I'll start looking around to diversify. But you also mentioned something, you know, the people that are listening, this is recorded. You know, my advice is to listen to these recordings over and over, because the advice that you're getting from these experts, this is not something you learn in 2 hours reading a pamphlet or a book. You really have to listen to what they're saying word for word. And then, you know, my job is to take all that information and distill it to you to come up with what's the best plan for you. Is it stocks? Is it real estate? Is it Atlanta? Is it Los Angeles? What is it? That's what I look at. What's the best business plan to get the yield that you're looking for?
I love that. And we have a webinar coming up. It's called Meet Multimillionaire Rick, and it's awesome. And it really gets into his story, and we'll be sending that out soon too. And join us if you're watching for our deal and no deal presentation. I think the first one we're recording is Saturday at 11 a.m. Eastern Standard Time. And this is going to be a really great presentation, really that kind of delves a little bit deeper. So if you haven't signed up already, make sure you do that. And I love the fact that we have all of these amazing experts in our network. I remember, Dennis, you were on our event, was it last week, on the IRA Club, talking about the IRA Club and how to self-direct your IRA.
Yes, I just came on to an event about 6 months ago and I never turned off my system. So I'm always here.
But you know what? I remember a conversation that you and Rick had, and it just blew my mind, because we were talking about different areas to invest and analyzing areas and how to assess economic fundamentals. And it just reminded me when I mentioned, well, is this a good area to invest? Because they have a lot of employment coming in the area, including in Amazon.
Yeah.
And I think a lot of investors think that this is a really good economic indicator, like, wow, Amazon's coming. And then Dennis pipes up and says, everyone's so impressed with Amazon. What does that mean? A bunch of $15 an hour workers are coming to an area. And then Rick's there nodding. He's like, yeah, the true wealth builders and people who are drivers of the area are going to be your professionals, your doctors, your university professors, the bankers, all the people in those. So I just thought that was just like, wow, you know, even someone who actively invests, advises, coaches, and everything, we are learning from our experts every single day as well, because you hear a lot of information, and as you're assessing information areas, sometimes, you know, you need these reminders. You have to have these people who've been in the industry for 60 years. You must have learned a lot during that time.
Well, you know, you said something earlier. I've been doing it 60 years and I literally learned something new all the time. This is not a business. This is something Dennis mentioned. It depends on your temperament. If you don't like a changing situation, you don't want to be in the real estate business, because this sucker changes by the hour. So you have to have that temperament to say, okay, or like you said, give it to a syndicator who understands the temperament, and he will tell you what it will intend. Or I like triple net leases too, much less risk. They're handling essentially all the numbers. So there's so many different things to invest in. The question is, which is the best one suited for you, your temperament, your time, your money, and so forth.
And you'll only know that if you work with a coach.
Yes.
Because if you're in charge of your own finances, and I think George will attest to this, if you're in charge of your own finances and your own portfolio, you're in deep, deep doo-doo. So you need to have a board of directors. And someone else also mentioned the economy and what's happening with the economy. I believe everyone needs to create their own economy. You're saying run your business, Rick? I think your life is your business. Your family is your business. Your bank account is your business. Everything, your health is your business. You have to run your life like you would run your business, for sure. Now, we did have Abel. I want to pull up Abel before we hop off, because Rick kind of segued into apartment syndication. Abel was on one of our events last night. It was impact investing in multifamily real estate. He also is in Texas, and he's acquiring apartment buildings in Texas. Abel, can you activate your camera? Because I cannot see you at the moment. Or did he step away for 1 second? He may have stepped away. Lucy, if you can message him and ask him to come back, or there he is. First you're late and then you left. Can you hear us?
Oh, now I can. So I don't, not sure what. Hello.
What a presentation last night, Abel. That was phenomenal. And you missed Jackie from Texas. I wanted to introduce you to Jackie.
I'm sorry.
She's killing it in Texas as well. Can you tell us what we love your state.
I love Texas too.
We want to hear what you're doing. Tell us more about these apartment syndications.
Oh yeah. Hi everyone. And might I say, Miss Monica and Lucy at RPI, you pull some amazing people together. So Rick Mariansky, like he said, listen to these videos, watch them over and over again. I've listened to you and your son over and over and over again on some videos. And Dennis Blitz with the IRA group, I've also heard you on multiple stages and platforms. And I think I directed some money from my 401k into a self-directed IRA and put it into my first 128 unit apartment complex as a passive limited partner investor. So you have a great group of people. But yeah, what I do, my name is Abel Pacheco. I'm in San Antonio, Texas. I do multifamily syndications. So we pull money from many multiple limited partner passive investors, and we just try to buy something bigger than what we would be able to buy on our own. And we've been buying anywhere. Our smallest deal is about 88 units. In McAllen, Texas. It's about 3.5 hours south of San Antonio. To our largest has been 268 doors in San Antonio, Texas. So we buy multifamily apartment complexes through syndication. We do a general partner, limited partner equity split. Normally they're like 70-30, and we'll go down to 80-20 if we need to, like we did on our biggest deal, just to make it equitable for our limited partner passive investors to make sure we can get a good return. And yeah, enjoying it. It sounds, before I started doing multifamily, I just thought in my head, there's no way I could do this. But really just pushed through some limiting beliefs, education like this, and really built a little bit of competence in the subject, which brings you confidence. And then you take a bunch of action and, you know, a couple skin knees here and there. And we've invested three passive investments and 6 active deals where I'm a general partner and principal on. So we're a little under 1,000 doors actively and passively. And, you know, it's exciting. I'm excited for it. And the way I simplified it in my head, it's like a house flip. Instead of a $100,000 house flip, it's like a $10 million house flip. And there's a lot of doors, there's commas and zeros, but you're still doing the same thing like the investment house. You know, if it's 100K, you try to borrow as much, or you try to leverage what you can from the bank, call it 80%. And as an investor, I may bring 20% down. So that would be like on a 100K house, 20K is what I need. And then maybe another 20K to renovate it. Well, I do the same thing. We're just $10 million deals. The bank's giving us 8 million and we bring 3 or 4 million. And that's the 3 or 4 million that we need is the down payment and the renovation rehab. And that is the limited partner spots. They're equity partners. And we just try to put together a good return for everyone. So that's what we're doing in Texas right now.
That's amazing. And I loved your event. And if anyone wants to learn more, make sure you come. He has 2 more events coming up. And these are also impact investments as well. Now, before we get into that part, I do have a quick question just for people who are listening. What is the minimum investment for US people? And if Canadian people want to participate, do they have a different minimum investment?
Same minimum investment. I don't know what the conversion is to CAD, but it's a $50,000 minimum investment for the limited partner spot. And then whatever the conversion is over from.
It's very sad, and we want this to be a happy show. So we won't disclose that part. But Canadians still can make a lot of money because they're getting paid in US too. You got to move past that point of pain. Is that yes? Okay, guys, it sucks. We have a conversion rate for Canadians investing in the US, but you are also getting paid in US dollars too. So this is kind of like one of those limiting beliefs, you know, that people just kind of have to move past. They just can't see that point. They just need someone who's done it over and over and over again to really point that out to them. Are you allowed to disclose the returns on this, or do we have to wait to?
This one's this one is it's a 506C, a Regulation D 506C investment, which means I can basically openly talk about returns. And this that's what you're asking, Monica? I'm sorry,
Yes.
Returns. We put together a very conservative underwriting pro forma to say 10 to 12 on the low side, and then we have a really, you know, killer crush it 18% plus if everything goes well, maybe even a little bit higher. But that's including, as Monica mentioned, we have a nonprofit that we are supporting through this opportunity. It's called Apartment Life. And Apartment Life is they're a faith-based community organization. They put a community member, they give them an apartment unit, and then they put one of Apartment Life staffing there, and they really help with the community. And it lowers the crime rate, increases the tenant retention, to the renewals of leases, which helps us with obviously the business model. Less turnover is better for profit for us, but they're a really awesome, you know, organization that creates a community in the apartment community. And we give them, I think it's a little over 10% of the general partner slice of the pie. So they're, you know, all the profits or all the equity, they're an owner in the deal too, and they're supported throughout it. And they have an amazing mission that we wanted to support. So that's what makes it the impact investment.
I love that. That's amazing. And I know you hopped on a bit late. I wanted to introduce you to George, who's a fiduciary, but has a financial planning business as well as an amazing podcast. I know, Abel, you have a podcast as well. And he too does a lot of philanthropy, and he has these financial planning tools to help improve the lives of people, which I think is so important. He offers a lot to volunteer organizations as well and philanthropies. And I think you two definitely need to connect. George, could you imagine if you're able to offer this to this Apartment Life, and they're in turn able to offer it even to people who live in the apartment buildings? Imagine being someone who you're just making your way through like so many of us are, and think that everyone's forgotten about you and no one's here to help you because it doesn't benefit them. Well, guys, there are people out there like Abel, like George, like myself and Lucy, like everyone in this room. We are all heart-centric, and we come here from a people first approach. I mean, look at Kathy and Deb. It's the name of their whole organization, People First Financial, because everyone genuinely wants to help people get ahead. This isn't about padding our own pockets. It's about helping people and increasing their quality of life, giving them the information that they need to start building wealth today. So I'm really hoping that you two definitely exchange contact info. And I hope all of our experts, I'm really excited to have everyone introduced to one another as well, because I see so much value in this room. And I'm so excited to be working with all of you and to help change the lives of American people and helping people in America build wealth through real estate, and even Canadian investors too, Australian investors too. We are a global company, and we will be helping people all over with this advice that they need and these investment opportunities that they need. Now, we didn't have any questions, so it turned into more of an intro thing, which is so exciting. If anyone, I'll give you one last chance. We have Jim Dennis is asking, as a Canadian with no US exposure, how do we get to the point of qualifying for a mortgage? Well, you know what, Jim? That's an excellent question. And Kathy and Deb had to log off. So Lucy, can you make sure that Jim, Lucy and Al, we get Jim, write your email in the chat so we can get you connected to them, and we could definitely get that question answered. Or better yet, if you're on this, book a discovery call, see how we could help you, who we could connect you with, and we can help you guys all start building wealth today. Did anyone else have a question for our experts? And if you want to unmute yourself, you could even ask your question live. And I know we have some members here that are part of the Real Property Investments community that have signed up, and they might have questions. Even though members, you guys also know you have your member site, you have full access to all these people, and just get us to make that connection and we'll get your questions answered ASAP. So we will do this again for sure. I cannot thank you guys so much. Lucy, if you could write our website in the chat so they can learn more about us. We will send you guys a follow-up email telling you about these awesome events that we have going on at Real Property Investments. And we will definitely send you emails on happenings and also ways that you can be connected to these amazing experts and how we can help you start building wealth today. So Lucy just put it in the chat. Make sure you bookmark that website. That's our website. If you need anything from us, let us know. Otherwise, don't ignore our emails. They're really good stuff. They're always good. So make sure you open them. There's an investment tip number one. If you want to build wealth in your life, open your emails from Real Property Investments. Awesome. Thank you so much, everyone, for participating. And I hope.
Sorry, Monica. I think we have one question that kind of snuck in here. Abel, maybe this is something for you. What are the best markets for multifamily investments in terms of rental income?
A little bit. It's exactly what Rick mentioned, to be honest. Very sub-market specific. So I can say, oh, Texas is amazing. And it is. I'm a Texas supporter. But when I'm looking at my individual market, I'm looking at the basic market mechanics, population growth, job growth. I'm looking at the average median income, and I'm looking at some of the comps in the neighborhood. But even if I say San Antonio, Texas is where I live, and I try to buy a bunch of doors, I'm still even looking at like super micro specific in my actual zip code or little, sub market within San Antonio. So I can talk about the market mechanics. So you want a place with good job growth. Job growth is what brings usually the correlating numbers are job growth and population comes. People follow jobs. And if they do that, then you have what we're hoping for is a higher average median income. And when I'm looking at like for the apartment complexes for the submarket, I want enough average median income. So take the total dollar amount, pulling out my calculator here. Let's say the average median income in the market is $40,000. I want at least a third of that to be able to cover their rents. So if I say 40,000 divided by 3 for easy math, 13,333. That's for the year, divided by 12, and that the math is $1,100 a month. I want to be able to buy something in the, where it's $800 or $900 rents, and I know I can push some improvements up and not pass that $1,100 mark to force my appreciation up. So that's the market that I'm kind of looking for. But and I think that really applies outside of Texas, but I am buying in Texas for other reasons. I'm San Antonio, Texas, because I live here and I see the population growth, and I've seen it grow for the last 20 years. So I'm pretty biased when it comes to my personal assets, and I also want to be able to drive all of them in a day if I actually wanted to. So that's kind of fun. And then, but I bought a deal in McAllen, which is 3.5 hours south. I like that market, even though it's a tertiary market. It's probably not a secondary, it's probably tertiary. It's small, but it's supported by the US Mexico-Canada agreement, which is the old NAFTA agreement. So that if you Google USMCA, it's basically all of the definition of how much, like hundreds of billions of dollars go from US to Mexico to Canada and between our 3 countries. So it supports the Rio Grande Valley because that's the borders where they all meet. So that's why I like McAllen. I've invested there. And then Dallas is like the number one. I think I saw an article that just a few months ago, it overtook Manhattan as like the number one most desirable market. It was like, it's crazy to me. Dallas is that, but it's just fast growing and sprawling. And I guess there's a lot of land for it to continue to grow outwards, as opposed to like New York or, someplace that's land, locked with less land. But we bought a deal in Greenville, which is about 45 minutes south of Dallas. So it's outside of it, but they had really good market mechanics. The average median income is high. Population growth is good. We bought it at a low basis where we could push rents up. But so a little bit of thoughts on that stuff.
That's awesome. Rick, did you want to hop in? I can see you look like you're itching to say something.
Well, I know our time is up, but he's exactly right. He learned a lot from me, I'm sure.
I did, Rick, I did, man. And a lot of the way you look at the numbers too, literally.
You know what? The thing is what Abel is saying, listen, you have to know about the market. One of the things, you can't just buy something because you have cash flow and then all of a sudden 3 years later it dries up and you got less cash flow. You want to be able to buy where that property sustains itself. I look at everything over a 5-year period. So yeah, you can buy something for income today, and then all of a sudden next year there's less and less. The people can't afford it. Their business is starting to decline. So you had a good deal on day one, and at the end of 3 or 4 years, you're sorry that you even bought it. That's why I look at everything for 5 years or more to determine, is this going to be a long-term play? And yeah, it's all based on the business in the area. If business starts to leave, population starts to increase, the per capita income starts to go down, that property is not going to be a very good investment over the 3 or 4 year period. Mm-hmm. So that's what you need to look at. So I'm the numbers freak that's always looking at, what's going to happen, not today, but tomorrow, next year, 5 years, 10 years. Yes.
Well, numbers don't lie, but the media does. So next time you read something in the media, say, are they a real estate investor? Because I think people are dependent on the media and hearsay, and they tend to listen to a lot of people that aren't even building wealth in real estate. Everyone's an expert. I think they say opinions are like armpits and most of them stink. Yeah. So when you have a place to come and you come into rooms like these, and this is all we do, guys, we live, eat, sleep, and breathe real estate and investments. It's in our blood. It's part of our lives. Our children are probably permanently scarred, transformed for life as well. They are not going to be able to think like normal children. And that's the kind of community that you need. And that's what we're here to provide. Yeah. So thank you again, everyone, for coming out. We went a little over, so thanks for people who stuck with us. And we'll definitely do something like this again, but don't ignore our email. We'll let you know how you can work closer with all of these amazing experts that we have in our Real Property Investments team, as well as with Real Property Investments. So have an amazing weekend, and we will talk to you all soon. Thanks, everyone.